Well, we know the Federal Reserve cut rates this Wednesday, but every day since then, every day, these things have been moving up and the stock market's been moving down. So what's actually going on? So in today's video, here's what we're going to talk about. We're going to talk about the Federal Reserve. They cut this week. Yeah, we know. But what they're doing with their assets, it's kind of a game changer. So we're going to have an interview here. It's an interview on CNBC from a bond trader, basically the day when the Federal Reserve announced what they were going to do. And it was kind of eerie what he said. So if you're trying to figure out what's going on with these, my goal is to help you figure that out today. So folks, my name is Dan Frio. I do this each day so you can understand what the heck's going on with those and the whys behind it. If you're a homeowner right now, I got some great news for you. If you want me to track rates for you so you catch the next drop, you can go to my website. It's therateupdate.com and sign up for this right through here. The Rate Watch 2.0 tool. What this gives you the opportunity is tell me what rate you want to refinance at, and when it hits there, I'll reach out to you and we'll go over the numbers and see if it makes sense. But here's what we're going to talk about in today's video. When are mortgage rates going to go up, and what other alternatives might you have if you're a homeowner and home buyer? Let's go over those details, and let's start first with what the stock market's doing this morning in earnings reports. So far today, we have the markets, they're rebounding. What a 24-hour makes. We have Apple and Amazon came in with just robust earnings. Apple had the best earnings report ever in history. I just watched the interview. Then Amazon, their profit margins were running about 3%. It's a big company like that, that's pretty good. Right now, I had to write it down. They're running a 12% profit margin. That's awesome. But maybe that's why inflation's up so high. If most people buy on Amazon or you have Apple products and their product prices are going up extremely high, pushing up their margins that high, maybe they need to start cutting their prices a little bit to cut their profit margins. But we're not here for that. We're here to figure out what's going on with mortgage rates and the whys behind it. So today is a little bit of a reprieve. What we're seeing right now is the market, especially the bond market for mortgages, is actually getting a little bit better. I'll cover that in a second. But let's get over to CNBC. They did an interview with this young man with Bank of America. And this was the interview before the Federal Reserve actually met. Let's look at how accurate he was. But then he also talked about what the Federal Reserve most likely is going to do with their money as with the roll-offs. A little confused. Let's watch this interview. It was like he was Nostradamus. Let's get over to it, and then I'll just dissect it for you here in a second.
Right, the Fed set to announce a decision on interest rates this afternoon. Joining us now, Mark Cabana, head of U.S. rates strategy at Bank of America Securities. I'm getting ahead of myself because I've got all kinds of questions about the dual mandate. That I can look at it from both sides now, like Joni Mitchell. But what point were you making off camera about QT?
Yeah, well, look, the Fed's widely expected to cut 25 basis points today. That's fully in the price. The market will be looking for any guidance on December. We don't think Powell will be as forthcoming as what is priced. The market's expecting almost another full cut at the next meeting. But what we do think will be of a lot of relevance and more than usual is what the Fed's doing with its balance sheet. So as you probably know, the Fed, for the last almost 2.5 years now, has been shrinking its balance sheet. It's been reducing the amount of excess liquidity in the system. And money market rates have started to move in a way that we think will now prompt the Fed to stop that process. So they're seeing money market rates move higher somewhat quickly, I think a lot faster than they expected right now. And that's going to cause them to make some adjustments as far as what they're doing with their balance sheet, and then maybe even adding additional liquidity to offset some of those pressures.
So that's like a 50 basis point cut instead of a 25?
No. But the magnitudes that we're talking about in terms of the Fed's balance sheet do matter. They've shrunk their sheet by over $2 trillion since they started this process. They thought they'd be able to run it, at least according to some Fed officials, for another almost $300 billion. And they're finding that actually they can't. And the risk here is that if they don't stop QT and if they don't add liquidity into the system, then there's a risk that these movements will end up actually forcing several market participants to deleverage.
And that's not good news. So let's break this down. So what the Federal Reserve did, they start buying T-bills. Those are short-term maturities. Those should hopefully start driving down those yields. So let's go over real quick, just before we go any further, I want to explain to you real briefly, and I'll have a video about this, how adjustable rate mortgages work. So don't turn the channel because you're going to learn something today, and this is really informative. A lot of people don't understand this right through here. Okay, this is an adjustable rate. It says 7/6 SOFR ARM. Okay, so SOFR means that's the index that it follows. Okay, so just look up SOFR. It's one of the most stable adjustable rates there is. The 7 and the 6 at the beginning of that, what that means is the 7 means how many years that rate is locked in. It's locked in. You don't take an adjustable rate mortgage and then next month it adjusts and then next month it adjusts. This one is for 7 years. Then every 6 months after that, it'll adjust. So they're not as scary as they used to be, and they're hugely regulated. Okay, so I'm going to be doing some videos on that. Pay attention to it. It might be an entry point into getting you maybe a little more savings or a little bit more of a home that you otherwise might not be able to afford. Now, I'm not trying to get you into a risky loan because most people in history have refinanced or sold their house within 7 years. So if you use that analysis, you might be pretty good. So if you're a home buyer or home owner, let me give you some tools that you can use. If you're looking to buy that first house, I'd love to help you navigate this. Folks, my name is Dan Frio. I do this report each day. And my slogan here is one application, one credit pool. We're going to compare your loan to over 30 different lenders. How do we do that? I have a special event each Wednesday to show you behind the scenes, and I'll try to post that up there. So if you're also a home owner and you're looking to refinance, but just really don't know what rate to refinance at, do me a favor, go into the Rate Watch tool, put in your information, look at your mortgage statement, and put in a rate that's 1% lower than where you're at. So when it hits there, I'll reach out to you. We'll go through the numbers and see if it makes sense. But let's get over to here. This is what the Federal Reserve monitors. During that interview at the beginning, he was saying, well, the Federal Reserve has two mandates, and I wonder if they're really thinking it through on both these. So here's their mandates. One is right through here. This is employment. Their job is to keep the jobs market at full employment. Full employment is 5% or less. Well, at 4.3. I'll give them a thumbs up on that. This one over here, that's the inflation rate they watch. They don't watch the CPI, which is consumer inflation, like me and you watch. They watch the PCE, that's the personal consumption expenditure. That thing, they want it too. It's at 2.7, and it's been moving up almost every month since April or May. And so it's not going in the right trajectory. But the Fed even came out and said this is going to be expected because of tariffs. So we're not hugely worried about that because we think it's going to come back in line. This is the area that we're most focused in right now. So if you go over to the Fed Watch tool, here's the scary thing, folks. And this is really, I want you to get positioned for if you're a home buyer or home owner to do something. Okay, here's why. In 40 days, the Fed's going to meet again. The thing that's really hicked up the markets over the last couple days when after the Federal Reserve met, is if you go down through here, let's look at the probabilities. And this is where I say, I go in this every day, and you guys probably sit there and say, okay, yeah, it's the same thing over and over and over. Look at today's change. This was like 90% chance that they were going to cut rates at the next meeting. What's the federal funds rate right now? 3.75 to 4. So if you go over to here, 3.75 to 4, there's a 35% chance it's going to stay there, and there's a 64% chance they're going to cut at the meeting. This was 90% before the Federal Reserve cut rates. So now they're saying, well, maybe the Federal Reserve isn't going to cut rates, and that's what's basically causing the markets to tailspin. So the biggest news right now that everybody's focusing in on is earnings. Some earnings are cracking. They did a study. If you're a millennial making under 100 grand, you're pulling back. So you're going to pull back on things like what's up here, Domino's Pizza. I was surprised Apple blew away its earnings, but there's areas up through here. What came out this week that wasn't so good? Starbucks and Chipotle's. That's probably where you go, once a week, or Starbucks every day. Their earnings are just cracking right now because millennials are pulling back. You have those student loans to contend with, the high cost of living in general. So if you're trying to get a house, hopefully we can help you. If you're a home owner right now for some relief, hopefully we can help you as well. Folks, let me go over to you and show you who I am and what I do and give you some tools to help you understand this. But here's who I am, folks. My name is Dan Frio. I'm actually a mortgage loan officer. I'm licensed in all 50 states as well as Puerto Rico. Yeah, if you're anywhere out there, I can help you, folks. We have a slogan. It's one application, one credit pool. We're going to compare your loan to over 30 different lenders. So here's what we do. You put in your application, we get you approved, and then what we do is we have over 30 other lenders we can work with. It's like a broker, but we're a bank. And we can offer you their programs, their rates, and you work with me during this whole time. So how do you do this? Well, to find out more, just go to the rate update, give us a call, ask me a question, schedule a consultation, or just watch every day and subscribe. So every day I come out, you can understand a little bit more on what the heck's going on with those and the whys behind it.